Welcome to BWC News. I am Elizabeth. The Federal Reserve, the central bank of the United States, is also selling off a large amount of U.S. debt, on a much larger scale than the central banks of other countries. What is the signal that China's balance of U.S. debt has actually increased by $20.5 billion? The U.S. is still primarily using U.S. debt as a means to regulate the U.S. economy. China, the world's second largest economy, used to hold the amount of U.S. debt that has been located in the world's first, but the current ranking of its holdings has dropped to second after Japan in a massive sell-off. It should be noted, however, that the first and second mentioned here refer to overseas sellers and do not include the United States, as the largest buyer is the United States itself. If the U.S. is included, the Federal Reserve is the central bank that holds the most U.S. debt. Today, central banks around the world are selling U.S. debt, and it turns out that the biggest seller is actually the Federal Reserve. From the U.S. balance sheet, the Fed's holdings of U.S. debt have decreased by $550 billion compared to last May, an average of $50 billion per month. In comparison, China or Japan have reduced their holdings by far less than the Fed. China has been selling its U.S. debt for a long time, and many countries have sold their holdings as a result. Whether or not China increases its holdings depends on the state of the economy at the time. In the first quarter of 2023, China's economy grew faster and the growth rate of foreign trade was more optimistic, so China's trade surplus expanded rapidly. The structure of China's foreign exchange reserves consists of dollars, euros, pounds, gold, etc., and exists in different forms, such as stocks and bonds. The main reason why they exist in this form is that they have a high liquidity, which facilitates foreign trade transactions. The data published by the U.S. Treasury look at the balance of U.S. debt held by China, which increased by $20.5 billion in March of this year. U.S. debt is not only a political investment, but also an economic gain. Some of the dollars China gets from trade can be used to buy goods, some can be used in the U.S. and some can be used to buy goods from other countries, but there are many more that are not used up, which is China's trade surplus. But the problem is that the dollar continues to weaken, and in this case, simply banking the dollars that China has accumulated from its trade surplus is like sitting on the sidelines. Therefore, swapping some of the dollars into U.S. bonds and buying them while they are low is also a good investment option. U.S. Treasury defaults, runaway crisis, inflation crisis, bank failures. Three major crises are getting more and more serious, which the U.S. debt crisis and bank failure crisis are related to money, inflation crisis and commodity related. These are China's strengths. China's increased holdings of U.S. debt can help the United States escape the three major crises. First, analyze the ins and outs of the three major crises in the United States. You will understand whether China can bail out the United States to escape the three major crises. The U.S. debt default, out-of-control crisis. In fact, the so-called U.S. debt default crisis, the essence of the U.S. national debt out-of-control crisis. This crisis has two main reasons. One is that the American people do not know how to save financially, within their means. The second is the top leaders of the United States, in order to the interests of their respective political parties, in order to vote a large number of printing dollars to please the American people, resulting in the U.S. finances out of control. The Treasury has no money to issue U.S. debt. China bought a lot of U.S. debt in 2008, so that the United States escaped the national debt crisis. 2008 U.S. national debt is only more than $9 trillion, but the United States did not learn a lesson at all. $31.4 trillion of national debt, more and more, seriously out of control. Even if China used more than $3 trillion of foreign exchange reserves to buy all the U.S. debt, only 1/10 of the U.S. debt, but also cannot let the United States escape the U.S. debt default, out of control crisis. U.S. inflation crisis. The main reason is the Federal Reserve overissued dollars, followed by the U.S. artificially raised tariffs on Chinese goods, but the U.S. manufacturing industry has been hollowed out. China is the world's factory. Even if the U.S. government to raise tariffs, Americans must still buy Chinese cheap goods. Raised tariffs only artificially raise the price of imported goods. The result is to make the U.S. inflation is still high. The U.S. CPI data. The U.S. CPI figure is as high as 4.9%. For U.S. inflation, although the Federal Reserve Chairman Powell has raised the dollar interest rate from 0 to 0.25% to 5% to 5.25% level, but U.S. inflation still exists. An important reason is that the U.S. did not reduce tariffs. U.S. commodity prices are still high, which is not solved by the Federal Reserve. The U.S. bank failure crisis. The root cause is the Fed's crazy rate of interest rate hikes, so that the U.S. debt long and short-term Treasury yield inversion, so that the U.S. banking sector losses, is an important reason for the U.S. bank failures. Another reason is the U.S. management artificially created. Credit is the foundation of banking, and the U.S. confiscated private property deposited by Russians in U.S. banks to Ukraine. The apparent reason is great, but the U.S. forgot an issue of credit that is crucial to banks, and this action of the U.S. made people around the world worry that the money deposited in U.S. banks is no longer safe. Companies and private individuals around the world, due to their loss of confidence in U.S. banks, are taking their deposits out of U.S. banks and depositing them in the central banks of other countries, which is undoubtedly fatal to U.S. banks, and it can be said that this is typical of Americans to lift stones and smash their own feet. China's appropriate increase in its holdings of U.S. treasuries, of course, will help the U.S. Treasury crisis, and if sustained, will enhance the world's confidence in U.S. debt. But if the Americans themselves do not reform their financial policies, do not know how to cut costs and implement responsible financial policies, then the three major U.S. crises are bound to intensify, eventually plunging the U.S. debt, the dollar, and the U.S. economy into an even greater crisis. When the people of the world no longer trust the U.S. and the U.S. dollar, the internationalization of the RMB accelerates. On the one hand, there is a credit crisis in the U.S. dollar. On the other hand, there is a stable recovery in the Chinese economy, which supports a strong RMB exchange rate and is welcomed by people all over the world. The dollar index major trend belongs to the decline, the small trend belongs to the downward oscillation. U.S. CPI data, or up to 4.9%, with the bankruptcy of Silicon Valley Bank, the First Republic Bank collapse, fully illustrates the U.S. banking industry bankruptcy crisis has been very serious. The dollar hiking cycle wants the end of the dollar index substantial decline in certainty chances of large. Dow Jones, S&P 500, Nasdaq synchronized shock rise. U.S. stocks three major indexes small trend belongs to the shock, the general trend down relay has not changed. U.S. stocks leading Tesla, Apple shock down, Amazon shock up, the trend belongs to the shock up. Three leading stocks slightly stronger than the U.S. stock market index, the U.S. bank stocks fell, there is a rebound demand, U.S. stocks continue to shock up chances. A shares, the Science and Technology Board closed red, the GEM index, the Shanghai Stock Exchange Index, the Shenzhen Stock Exchange Index fell simultaneously, index trend belongs to the shock. Northward capital outflow of $1.4 billion, northward capital outflow for one trading day. New energy automobile leading Ningda era, BYD shrink shock small rise, small trend belongs to the shock up. Brokerage, banking, insurance adjustment, big financial sector adjustment is the reason for the adjustment of the SSE index, but the market hot spot is big finance. Good investors are always waiting, always patient, waiting for the market to confirm their judgment. Remember, don't trust your judgment completely until the performance of the market itself confirms your opinion. Just recognize that trends emerge and ride your investment boat with the tide to reap the benefits. Don't argue with the market, and most importantly, don't argue with the market high or low.